The election's out of the way. What should we look out for from sterling for this week?
Yeah, the election, it said, is out of the way, which was sterling positive. However, there's a swath of major UK economic data out this week, which will prove very key in terms of if sterling can keep its rally going. We have not only PMI data, which is out today, and remember, the service and the manufacturing sector last time were both in contraction. That's quite important because services are a very big part of the UK economy. So if that stays negative, then certainly not positive for sterling. We've got CPI data, we have retail sales data, we have GDP data, and we even have employment data. So really a lot of swath of very big data, which sterling has to really navigate through if it's going to keep rallying. Obviously, if the data comes out better than expected, that is going to be a positive. If it comes out weak, negative. And this will feed into the Bank of England decision, which also is this week. So really, sterling has got to juggle quite a lot this week before it can resume its rally, ideally above 135, which was last week's high.
You know, speaking of the Bank of England, David, as you know, the Bank of England has been all over the map this past couple of years on a hard Brexit versus a soft Brexit, what this would mean for the economy. Some have been critical of that. How will the BOE's rate decision this week play into any sterling moves?
Yeah, I think it's going to be very key. If you look at the market pricing right now, they're factoring about 40 to 45% chance of a rate cut by the end of next year. Most of those cuts really is priced in for the second half. I think you're going through June, the probability is about 35%. So basically the market's going, okay, we think it may cut. And the reason for that, if you look at the last Bank of England decision, there was two people who dissented and said we should cut rates right then. That was back in November. Now, of course, the question is, okay, we've got Brexit. Looks like it'll be sorted out because with the majority, Boris Johnson should be able to pass his bill. That takes the no deal off the table. The question, therefore, is how does the Bank of England interpret this? They may say, well, based on this data coming out this week, they may say, hey, look, the economy's still in a bad position. We need to cut. They may be a bit more positive and say, hey, maybe this will unleash the animal spirits in investment and consumer, given that the no deal's off the table. So how they view it is very key. And if they certainly come out more dovish than the market expects, because again, remember, they're only looking for 40% of chance of a rate cut once next year. If they come out more hawkish, sort of more dovish than expected, the market will have to factor that in very quickly, which would be sterling negative. Vice versa, if they adopt the approach of the glass is half full, then I think sterling will be happy with that. If the data comes out fine, you'll see sterling resume its rally.